Greetings everyone, Joseph James here, SchoolOfTrade.com, April 29th, 2010. Here's your live trading recap. Had a pretty good day in the room today. Before we talk about those trades we took today, I want to remind you guys our blog has lots of free resources on it. The link to our blog is posted right below the video. While you're there, guys, check out the articles, check out our live recorded webinars, and don't forget there's a search box there. Use that search box. Any different technique or strategy or term you're looking for more information, that search box, hope you guys find it there on our blog. Check it out. Let's see, we took 2, 4, 5, 6 total trades today, guys. You can see we set a couple losers in there, right? Had 2 losses in there as well. We took a dollar trade. We took a wave trade today. We took some breakers, some 2-steps. Boy, we had a mixed bag of goods today in the room today. 27 ticks, almost gave it all back there 11 o'clock. We'll show you guys here in about a second how that trade looked out. Losses do happen. It's how we react to those losses that makes us, of course, professionals here. So 2, 4, 5 total trades, 27 ticks in. We're shooting for that $9,000 this month here, guys, in live trade room. Make sure you guys don't miss the rest of the month. We'll keep you posted. Listen, most important thing today that happened. Today was post FOMC announcement, okay, which means FOMC day was yesterday. We had, of course, nice big winning day yesterday. And of course, we're seeing a little bit of the hangover lingering here this morning from the FOMC announcement from yesterday. We continue to see bond ratings get cut across the globe right now. The global marketplace for currencies is getting shaken up. Obviously, the catalyst was that Greece news last weekend, of course, the big Greek bailout. And then now this week, we're seeing more and more of these ratings agencies cutting these things down to junk status, which is causing the euro, the pound, the yen, and a lot of other markets to, of course, begin increased volatility. Now, we also know the past 3-4 weeks we've seen increased volatility late in the morning. So we knew this morning we had to wait a little bit late. And we wanted to give it more patience. Okay, at the open of the day to see kind of what the mornings look like. We didn't want to feel pressured into taking trades early in the morning because we've seen this over the past 3-6 weeks now. The patience has paid off. The better moves come later on in the day. And don't forget, we always want to watch that dollar index first trade of the morning here. All right, speaking of the dollar index, let's take a look at that real quick. Once again, double tops, double bottoms. We're still going in this very sideways range of the dollar. As you guys know, when the dollar is going sideways, it tells us the rest of the market should also be going sideways as well, which under normal situations would be a bad thing, but with our DX pattern, it actually puts us in a pretty darn good position. In fact, we took a DX pattern short here at 9:30 this morning. You can see right here in the dollar as it tested its double bottom there. Okay, so sideways mark in the dollar, it tells us be careful out there, but more importantly, sideways mark in the dollar means be on the lookout for that DX pattern, and especially at the lows here, that means we're looking for a DX pattern short. But as you can see though, the dollar was going sideways. That of course told us a little bit more about the market this morning. We then jumped into the DX pattern short here on the euro at 9:30 this morning. We saw that DX, right, the dollar index resting at its lows here. Looking at this chart a little bit closer here right now, this is the first trade of the morning here. We had our low of day on the dollar. So you have the dollar index on the left, you have the euro, right, the 6E on the right. Okay, both of these are the fast time frames. You'll see these are 8 range charts. Okay, so these aren't the slow time frames. These are zoomed in now on the fast time frames. And you can see the dollar is at the low of day. You got the euro here on the other side at the high of day. And so as you guys know, dollar resting on its lows. We double check to make sure there's no overhead resistance in our way. We identified this morning that resistance level was at 82,175 here at 926, right, on the dollar. Okay, so 82,175 at 926. That was our level to break on the dollar. Once we saw us break 82,175, we were looking for the downside on the euro. That's where we are over here, 926 now on the euro. And look at this, drops out of the sky. Now, if you're with us this morning, we had to chase after this thing a little bit. We got a little bit late, but as you can see, nice big, right, nice big 40-tick move here, right, coming down from the 50s all the way down. Before we really ran into any problems here, 40 ticks later, okay, 920, 929, 930 here as the U.S. Open came out, we've got plenty of profitability in that trade. All right, guys, so whether or not you took it with 1 contract, took it with 3 contracts, guys, that's a huge winner, and we continue to demo this DX pattern here. Of course, this pattern this morning taken at 925, entry here short on the euro, right? So the dollar tests its lows. We identify overhead support on the dollar. We then break that overhead support on the dollar. Meanwhile, the euro breaks its support. It's low. We take the short on the euro. Nice big 30, 40, 50 tick winner. If you made it through this, guys, this thing had 70, 80 ticks written all over it there, guys. So no matter where you got into it, you made money in that one. Next up here on the scalp here over on crude oil, 915 here on the crude. We were looking at the same time here at scalps and on the wave and the DX pattern here. On the scalp though, 915. We've got your short-term trend being up. Okay, with that short-term trend to the upside here, you can see high of day overhead. Now, as you guys know, the high of day expected to hold, so we're going to look for a reversal off the high of day here. I mark up my swing low. This is a two-step pattern. Two-step pattern short, 84.80 was the fill. We got our +4 target filled, +8 target filled, and +4 for the runner. That totals 20 ticks or 200 USD. Very simple pattern. It's a reversal pattern that we look for at the high of day, called the two-step. So we put 20 ticks in our pocket there. First two trades, you can see we're both big-time winners here to get the day started. 9.15 on the crude, 9.25 on the euro, right? Both of which nice big winners there. Then we move over to the gold here half an hour later, 9.45. Now, of course, this time we were still in that euro trade this time. So while we're waiting for that euro trade to work out at 9.25, we of course took the gold trade as well. Breaker pattern long. This is a trend continuation pattern here at 9.45. That means we're going to go with the trend. We break above the red line, right? Overhead resistance. We mark up our swing high. We break above that swing high. 67.8 was the fill. First target at +4. Second target at +8. We trailed our stop up to entry +1. We got stopped out entry +1 at 17 ticks or 170 USD. So 2 off at 4, 1 off at 8, 1 off at the +1, 170 USD, 17 ticks, $10 per tick. All right, guys, so on the gold there, now that's 3 trades now, 9.15, 9.25, 9.45, all winners. All right, guys, all winners. Now we give a little bit back here at 11 o'clock. We were looking for this two-step pattern, as you can see. 10.08, trying to short the high on crude, get a scratch out of it. An hour later here, now at 11 o'clock, still in the crude, of course. We have the high of day here, of course, with overhead resistance. We're not obviously seeing the break of the high of day, so we mark our swing low here, break below that swing low. And you can see here that was 1 tick away from my target, and then it bounced back up and then came all the way back down. So like I said in the room this morning, it's difficult to be upset about that because it's clearly just bad luck. We're in the right place, the right time. As you can see, that little tiny bounce down, that was the move that took me in. Okay, bounced back up, stopped me out, and then came right back down, right? So, obviously we made the right call. Okay, clearly the pattern was in the right direction. Clearly we were trading in the right direction here, but we kind of caught some bad luck there. That's the way it works. This is the 1 out of 20 two-step shorts, right? That's going to happen. So we look for those two-step patterns that reversal at the high of day, and you can see here, good example of how sometimes they're not going to work out as planned. But you know what though? We get back on the horse, we follow our rules, we stay focused on our patterns, right? And that's exactly what we did. Next up here, about 15 minutes later, was the Russell wave here. Now, of course, this is the final trade of the morning here, 11:15. We started seeing things quiet down a lot this morning. This is a wave pattern here in the Russell. So the final trade called live in the room today was a wave long. A very easy and simple pattern to learn. Okay, you're going to, of course, look for your wave signal on the left side. Okay, so all in the left, right, lower left-hand corner, wave signal fires off. You'll see price jump to the upside. Then, of course, pull back into my zone, right? I get into the zone here. Inside the zone, 26.0, right around there. We get in at 26.5 for the long trade here. Okay, so 11:15, just before we finished up the morning here on the Russell, a wave pattern long. Another very easy pattern to learn, guys. We got our +7, move our stop to entry, +1. We got filled up +2. That's 18 ticks or 180 USD. Okay, so we finished up our day on a high note with a nice big winner there on the Russell here for a wave pattern. And before we finish it up, though, I want you guys to be aware of this. Look over here at the fast time frame, okay, on the Russell here. Now, the slow time frame on the left, fast time frame on the right. We have the slow time frame is where we look at the big picture, right? We see the big picture in the slow time frame. And then I'm going to zoom in now, right, onto my fast time frame to enter my trade. Okay, so looking for a wave pattern long, we're looking for a bounce, right, off that trigger line here at 726. Well, how do I know where and when to get in? Look for a two-step entry on the fast time frame. A little bit more of an advanced strategy here, but again, the two-step pattern on the fast time frame here comes down, bounces off the lows, we make it above that swing high, right, for your two-step pattern long, and of course that was where the move began. Okay, so the move got started, the pattern set up on my slow time frame. The move got started though on the fast time frame. We knew exactly where to get into the trade based upon that fast time frame to make sure we get the most precise entries. We'll talk more about that in our advanced course, our members materials. Let's prep for tomorrow. So as you can see, 27 ticks, gave back a little bit of money towards the end of the morning here, but hey, you know what? Stops happen, guys. We've had a great week. We'll prep for tomorrow, Friday, April 30th. Tomorrow we get 8:30 GDP and ECI number. 9:45 we have Chicago PMI. 9:55 consumer sentiment, and 11:30 tomorrow another one of our tips and tricks webinars. Don't want to miss that. We'll open up the room tomorrow morning, guys, at 7:45 a.m. So make sure you guys are here for that. Get a big news number out tomorrow morning, 8:30. So you don't want to miss that. Webinars on Tuesdays and Thursdays. The beginner's course is always designed for all you new traders out there. The beginner's course has all of our setup rules, our entry patterns, a good firm foundation of knowledge to start on, and of course course, the advanced membership is lifetime access to our trade room. More information, sales@schooloftrade.com. Hope the video helps, guys. Having a great month. Last day tomorrow. Don't forget. We'll see you then. Bye-bye for now.